Welcome back for the final stretch of today's conference. Our last panel, as I promised you before the coffee break, will be interesting and will address a core question of EIOPA's next chapter. How can sound supervision support a strong, competitive and resilient insurance and pension sector in Europe? The discussion will bring consumer, industry, supervisory, and policy perspectives, moderated, guess by whom? So once again, by Catherine from Politico. Please, Catherine and the panelists, welcome to the stage.
Yes. Wonderful. Okay. Welcome back. I hope you enjoyed the coffee break. Now we're gathering with this stellar panel for a session on sound supervision for a strong insurance and pension sector. Supervision is obviously at the core of EIOPA's mission. It runs through everything that you're doing here. So today we're going to talk about how effective, cohesive supervision can strengthen Europe's insurance and pension sector, balancing European-wide approaches with national perspectives and driving strategic resilience. And here today we have Agustin Reyna, Director General of BEUC, the European Consumer Organization, Frédéric de Courtois, the President of Insurance Europe, Sean Berrigan, Director General of the Commission's DG FISMA, and Gabriel Bernardino, Chairman of Portugal's Insurance and Pension Fund Supervisory Authority, and former EIOPA Chair. So thank you all for being with us. Again, we commence with a Slido poll. Today's question: in your view, what's currently the biggest obstacle to acting as a truly European supervisory community in insurance and pensions? So get those answers coming in. The options are fragmented implementation, limited tools to deal effectively with cross-border difficulties, divergent approaches to consumer protection, different priorities and capacities across national supervisors, complexity of the regulatory and supervisory framework, or no obstacles at all. I wonder if that will be a... Okay, 14% so far. Somebody thinks there's no obstacles. Okay, complexity of the framework is clearly in the lead. I'll give it a moment.
It's a good race.
Yeah, thank you. Everybody's very active. The next one we have is the last of the day, so I appreciate that we've been ramping up the participation throughout the afternoon. Okay, I think I can call it and say that fragmented implementation is the number one. Complexity of the regulatory framework is the second. So that's a vibe check in the room. But now let's turn to supervision today. Are we acting as a European supervisory community? Agustin, I'm going to come to you first. So from the European consumer perspective, do you think the current supervisory framework has a comparable level of protection no matter where consumers live in the EU?
Super. Thank you, and hi everyone. Really a pleasure to be here with all of you, and happy birthday to EIOPA and to all the colleagues working so hard in this agency. It is no news that there are many differences across the member states. This is true for twofold reasons, mainly the different transpositions of EU laws. Therefore, there are divergences at national level, but there are also different political and institutional realities, including on how much a supervisor focus on different aspects, including on conduct supervision, mainly on consumer protection. When we look at prudential supervision, as we have been talking throughout the day, we have a very harmonized and a centralized system, but the same has not happened with conduct for different reasons and political choices. But we do see the impact of these choices, for example, in the quality of the products that are offered to consumers across countries. It is not with the purpose of naming and shaming countries or supervisors, but it's just stating a reality. There are different levels of protection, and as well as there are different levels of product quality that we find across member states. And looking at it from an European consumer perspective, we need to leave the floor. And supervisory convergence is extremely important here. And if we look at domestic supervision, here there is a question, of course, of transposition of the law, but whether the supervisors have the tools to do their job, to start with. What are the powers that you have at national level in order to protect better consumers and your customers. And then there is a question, of course, of cross-border supervision. And there is the role of EIOPA and the ESAs, where centralization plays a very important role. And I know that when we talk about centralizations, member states sometimes are a bit careful about it. But also in the geopolitical context that we have been discussing, if we want to have scalability, you need to have cross-border centralization of powers, or at least a certain level of centralization that enables you to create that scalability. And we should not be afraid from saying that. And I know that is a touchy discussion across the member states, but it's necessary in the same way that it was necessary to centralize powers when it comes to prudential supervision. This is important also from the point of view of legal certainty. For example, we have seen national supervisors that have been, for example, more careful in taking some cases, for example, in the field of tackling greenwashing, either because they are exposed to potential legal risk due to uncertainties in the legislation, also not to put their national incumbent industries at a disadvantage. And this is something that in a single market doesn't work, or at least they should not be placed on that. When we look, of course, at a national supervision, what we could say or can say is that those countries that have a tweak-pick model actually works pretty well when it comes to conduct, and this is something perhaps to look more closely. And then, perhaps the very last point here is that when we look at supervision, we also need to consider how much are we willing to invest in it. And why I call it invest in it. This is a allocation of resources that we'll put on supervision. And while this might be perceived as increasing the cost, at the end of the day, it's an investment, because then you were able to create scalability. And with good supervision, you can create good market outcomes. And that's not only good for consumers, but also good for the economy as such. And this is perhaps a message to the Commission, that if we give more powers to the ESAs, we also need to think of giving the appropriate resources so they can do their job.
Okay, coming out strong with some spicy views already. I think we're going to have some points to pick up on later in the panel. But first, Frederick, let me come to you for the industry view. So where do you currently see sort of sound, predictable supervision working well? And are you finding that differences in supervisory expectations can make it harder for insurers in certain areas?
So first, good afternoon to everybody. As you said, I'm representing the insurance industry. And I will start with an important statement. According to us, the insurance supervision in Europe is working well. I could stop here. I will elaborate a bit. So why do I say that? I have a few proof points. I mean, the first proof point is the track record of the past years. And the mandate of the supervision is mostly around financial stability and around policyholder protection. And here it went well. And if I look as an example at the financial stability, it went well in a difficult context of extra low interest rates. It went well in a context of high inflation. So again, I think as a proof point number one, the track record is good. Then, as a proof point number two, I would name Solvency II. I have no doubt that Solvency II is an excellent framework. This is an excellent framework. We are again improving it a bit now, as you know, but it doesn't change the substance. And I think we are extremely well prepared in case of crisis. And my third proof point is that we are able to evolve and change. And I'll take the example of the cross-border business, which has not been an area of strength over the past years. We had quite a few accidents on this cross-border business. Over the past months, we've improved this. We've given EIOPA new tools. Even the retail investment strategy has given new tools. So here the proof is in the pudding, and we will see over the next years if we are up to the task. But again, we've demonstrated that we are able to change. So after all these good things, is it perfect and can we improve? Yes, we can improve, of course. And I'd like to give you a few examples. The first one is we need to stop changing rules. The rules globally are good. I'm not saying they cannot be tweaked from time to time, but now we need to stop changing rules. I mean, that's my first priority. My second priority, and I was happy about the survey here, is that we need to work mostly on the application. The application, the interpretation locally is not always the same in our various countries. So this is about national gold plating, this is about soft laws, opinions, Q&As, whatever. But at the end, if you look at the European regulation as it is and how it is applied in each and every country, there is a gap. And if we want to build Europe, we need to work on this. I mean, we need to work on this gap between what was intended and the application. And the last point I would mention as an improvement is the proportionality. And you know that Solvency II and the last version of Solvency II has brought improvement on this. I think we can do more. So to your most important question, is there a level playing field in Europe now? I would say it's much better than before. It's much better than before. We are not yet there, and this is my caveat is mainly linked to what I said on application. I mean, as long as the application lacks consistency, there is not a full level playing field. But again, we've improved a lot. So at the end, I think the framework is sound. The rules are fine. We need to mostly work on the application so that we have consistency and proportionality in what we are doing.
Okay, so let's go from this message not to change the rules to the one who's changing all the rules, Sean.
Stop, I think that.
We've obviously seen a huge push around the Savings and Investment Union from the Commission this mandate. Insurance and pensions are very important to that. Supervisory convergence. Let's talk about supervisory convergence in the SIU. How important is it to that agenda?
Yeah, I will come back to this point. First of all, let me congratulate EIOPA on its 15 years. A lot achieved. Excellent cooperation under Gabriel, Petra, Carlos, Fausto. We didn't always agree, even the Commission was always right, but we can allow people to be wrong. We have a dual mandate, as you know. Unlike EIOPA, which has this wonderful, simple view, I mean, everything is prudential. The Commission has a slightly more complicated world where we have to balance prudential against other objectives like market development and growth, which is where the SIU comes in. Now, there's no fundamental trade-off, I think, but there are balances to be struck between these two objectives, and I'll come to this simplification in a minute, because there are huge inconsistencies in what people say around simplification. Now, for us in the SIU, of course, the insurance is a key sector because it has a big balance sheet, and we would like it to deploy that balance sheet in a different way into more alternative investments, less liquid investments, but higher yielding investments. Just to bring in this point about the framework working well. Well is one thing, well enough is a different thing. And I understand I was not here, but you were discussing the geopolitical context. The context has changed. What was well in the old context may not be well enough. I'm always reminded of people who say to me, if it's not broken, don't fix it. Yeah. I have at home a Nokia phone, which I used to carry in the 1990s. I have no doubt if you phone it, it will ring out. But is it what we really need? It still works, but it doesn't work well enough. So one of our problems in Europe is that we settle for what we've got. We don't allow innovation. So I take the point that it works well, but we shouldn't assume that because it works well enough. Now, Augustin made a point, which I think I want to make as well, that in the SIU context, if we want to achieve through the insurance sector what we want, which is for them to invest in alternative investments, you need scale.
if you have a small fund, you simply cannot diversify into the sort of assets that we would like the insurance sector to do for us. Now, this scale brings you then to focus on your market, because the condition for your scalability is the size of your market, which brings us to the single market. Now, I'm always told that consolidation should be a market-led process, as if the Commission was going to mandate consolidation. We don't. I agree it should be a market-led process, but for processes to be market-led, you have to get regulatory and supervisory behavior out of the way of the market. And the fact of the matter is that there are regulatory and supervisory barriers to that market-led process. So that's what we are about. So, as in other sectors, and we're dealing now, of course, with financial markets more than insurance, supervisors can be a source of barriers. That is why in the market integration and supervisory package we put together, we included supervision as a barrier, because it's just, from a technical perspective, another barrier. There's always a religious element of supervision in Europe, let's be honest, but from my perspective, it's a technical thing. Supervisors sometimes accommodate barriers, they sometimes create barriers. Why do you need 5 forms when this guy needs 1? Why does your form have to be done a certain way when it can be done? So all these things have to be taken into consideration. So I think what we need is more convergent supervision, because what are the characteristics of a single market? Let's take Belgium as a single market. It is single things, single rules, single tax laws, single accounting frameworks, and a kind of single supervisory framework. These are conditions of a single market. So if we want a single market for Europe, we need, if not single supervision, convergent supervision, and fairly tightly convergent supervision. Now, I think EIOPA is doing its best here. I think every time we try to let EIOPA do better, the member states tell us we shouldn't do that. I seem to remember asking the member states to allow you to study internal models one time, and that was even kicked out. So who knows, we may try again someday, but you are not in the focus at the moment. But if we can get more convergence, we will get more integration. If we get more integration, we will get more competitiveness, which is what everybody seems to want, but also we will get more competition, which is also what we need. Because I am very much in favor of the insurance sector making more profit, so long as that profit is competed down to the end user. So I think supervision is not the only element of all this discussion, but it cannot be excluded. It is another form of barrier, and it has to be in the conversation. And this is the argument we're having in the context of financial markets. I have no doubt it's going to be a very difficult argument, but that's our argument, that this idea that you can just detach supervision and say it's not a problem, everything else is a problem, doesn't make any sense.
Okay. Gabriel, you're bringing the perspective both from the national side and from the EU side. I mean, in your view, where is European cooperation in supervision working, and where are there still gaps that it's too fragmented or it's too slow?
Yeah. Well, first of all, thank you very much for the invitation. It's a pleasure, of course, to be in here. 15 years, Jesus. And it's a pleasure to, of course, come to Frankfurt again. It's my second home, and I really feel at home in here. And to see many, many, many faces that I've been engaging through the years. So it's great, fantastic. So let me just say a few words about, how all this started 15 years ago, and, what is working well. And there's a lot of things that are working much, much better. I think we made this transition from the old world, the old Solvency I world, towards Solvency II without rupture, without making the market disrupted. And that's, I think, a fantastic achievement. And that was because, of course, we had, I think, good dialogue, good understanding at different levels, with regulators, supervisors, industry, academia, etc. And also because we had EIOPA. And I think we should not forget that. The ones that were there at the beginning know that for sure there will be no Solvency II without EIOPA. That I can tell you. There was a point in time where critically these were going to be abandoned, even by different member states. So without EIOPA, we would not have Solvency II, which I think at the end of the day proved to be the backbone of the stability that we had in the insurance market in Europe in these latest years. So there are a number of important tools that work well, coming from Solvency II, definitely better risk management for sure in the industry side, better understanding of risks from supervisors. But I want to focus on two things that, they were not in the script of what these guys wrote in Brussels. These were tools that were built up by EIOPA within the supervisors, and I think those are probably those two of the most important tools that we had. These collaboration platforms that now are in the law, in the regulations at European level. We started it because we felt that we had to do something to European consumers that were being, of course, not well treated with some cross-border business that were not done in the good way. So, we put home and host supervisors around the table, coordinated by EIOPA, and we started basically doing what, at the end of the day, everybody should do, which is not concerned about insurers, concerned about regulators, concerned about bureaucrats in Brussels. We should be concerned about people, citizens. That's what, at the end of the day, we should be concerned. And that's what we really do. And we had a number of cases, and that, of course, grew up as a very important initiative. Second element that works also well, and it's not very well known. We started at EIOPA what we call our oversight visits to national authorities. This is something that, I can tell you, it was very, very, very difficult to have national authorities agree to be challenged by someone coming from Frankfurt. I remember when we decided this is in one of our strategy days, a colleague at the board, I think, convinced the others, and many people know who I'm talking about, convinced the others by saying, okay, well, let's think about like they are a consultant that we cannot fire. And that was precisely what we started to do. And nowadays, I can tell you, this is a very important tool because we have colleagues from EIOPA going around to the national authorities, understanding the local market, the local risks, the way supervision works, challenging the national authorities. And this is a process that is fundamental and very important. And of course, we built it. Now I'm living with it because I had a visit a couple of weeks ago. And it's nice to be challenged. I tell my guys, your business is to challenge the insurers. You should be the first one to accept to be challenged also. This is what we need to do. And again, it's for the citizens, for the consumers at the end of the day. What's not working well? Well, a number of things, I will mention it in my future vision at the end, but what's not working well still right now? And I agree with the previous speaker that said that I think we need to do much more on the conduct side. I think that we still have a good number of products being sold throughout European insurance markets that have low value. And my friends, we don't need these guys to write another set of rules. That I agree with Frederick. We don't need more rules. We just need to apply the rules that are there. And we have already sufficient rules and sufficient power to use product oversight and governance, to use the IDD in order to be capable to ban some products from the market. And we should do this also for the insurers that are doing fine, that are behaving well, that are doing good business, and that treat customers fairly. So this is something that I think we should do better as a supervisory institution and of the supervisory community.
Okay, before we go to the next round of questions, I just want to give you all the opportunity to weigh in because we've had a lot of ideas come out here. If any of you want to respond to anything that the other panelists have said, now's your chance.
There's no plan for Solvency III.
Thank God.
What a good news.
Thank God.
Just to relax everybody.
Anything else here?
No, just to add, I like very much what you have said, as you could imagine, and picking something that John said, a well-functioning market, you build it with strong and solid supervision, which in a single market means convergence, but also competition. Competition is at the end of the day what they deliver the best market outcomes. Because if you don't have competition and you still want to have good market outcomes, what do you need to do? You need to intervene in markets. And of course, the sector doesn't like that. And for very good reasons. I would like that actually it's through competition that we can deliver better products for consumers. And it's not that the regulator needs to define what are the appropriate benchmarks, but because we cannot introduce that much needed competition in a market that is extremely complex for consumers, even if we will love to have simple products, and that is in the mandate of the ESAs, the reality is that insurance products are always going to have a certain level of complexity. And people have more important things in life than comparing insurance policies. So through competition, actually, we could develop those better outcomes for consumers. But unfortunately, this is something that much more work is needed.
Okay, great. Time for another Slido poll. The last of the day, I believe. Do we see the QR code for this one? Perfect. Okay, the question is, what changes do you think are needed in insurance supervision to better protect policyholders in a digital and cross-border market? The options are no changes are needed, more effective supervision, implementation and enforcement, better supervisory structure, or smarter regulation. So get those answers in. How are we looking? Okay, implementation is doing well. Neck and neck with smarter regulation. What do you guys think? Yeah, you're on the enforcement side. Okay, I think it's going to be a clear winner for implementation and enforcement. And smarter regulation is a relatively distant second. That's a good question. We can ask whoever wrote the poll what smarter regulation is, but I'm sure there's some. We agree with the results. Yeah, I'm sure there's some strong views on that in this room. Okay, let's talk about the future. Agustin, we are seeing everywhere risks to consumers' resilience rising. We've got cyber threats, climate impacts, pension adequacy concerns. What do you think are the concrete actions by EIOPA and national supervisors that could most help consumers' trust in the insurance and pensions market?
Yeah. I think it was Petra who, at the beginning of the day, she mentioned how with the financial crisis, we ended up harmonizing and centralizing powers that led, obviously, to the creation of EIOPA, particularly for prudential supervision. We have now a pension crisis around the corner. I think in every single member state, that's a reality. And we have a pension crisis where public finances are not going to be able to cope with it, and we need to turn to the market. But the offers that are available in the market, they're not optimal for consumers. And we had very long discussions about this, also in the context of the retail investment strategy, that we no need to go back there. But now we are discussing the standardization of products where supervisors can enforce a minimum level of quality. So it's related to what I was saying before. If we cannot inject competition in a market, then we need to intervene and define benchmarks, which is better than nothing, because the status quo is not optimal. So there, I think what the EIOPA is doing on the value for money work is extremely, extremely important with the powers that you have. But here, what we need to bear in mind is that if you're going to develop and standardize products that eventually people are going to get auto-enrolled, it has to be a good product. You cannot auto-enroll people on a poor product. That will be financially, socially, and politically a suicide if we do that. And that is where it becomes so important, the work of the supervisors to define this minimum benchmarks for products. But when we talk about minimum benchmarks of products, we need to look at something that is above the average of the market. And that's a reality, because that means that it's going to clean up a lot of products that are not suitable for consumers to buy. And here, what I think is also important to bear in mind is that we don't need to wait for the crisis to actually happen. So we can act now because we know that it's going to be there. And therefore, we obviously continue supporting this work that EIOPA is doing on value for money, but a certain level of regulatory intervention is needed, to create a framework so you have the tools to act. So that is on pensions. And the other point that I would like to mention that is increasingly more consumer-facing than ever is climate risks. And we have two problems here. On one side is the insurance illusion, that we have an insurance and we think that we are covered, when in reality we are not. A typical example, flooding. If the water comes from the sea, you are not covered. If it comes from the river, you're covered. So basically, you need to take a sip to see if you're going to be covered or not, with your wooden boots. And then here is the solution. Somehow lies in developing, products that cover a wider range of risk. But then there is an even bigger problem that we need to solve here, which is the internalization of externalities. And the question is how we make the big polluters to pay for higher premiums in order to be able to provide the necessary coverage actually for those that do not cause the risk, meaning the consumers. So why I would have to pay more for my house insurance where I have not created a risk? And this would say that it's a bigger question, because it's about basically to increasing the premiums for those polluting industries in a context where geopolitically we know that we need to boost the competitiveness of the industry. But still, it is a matter that needs to be addressed somehow, because by just increasing the premiums for people, it's not going to solve the problem in itself.
Okay, thank you. Frederick, one of the themes that we've come back to in lots of the panels today is this idea of supervisory community. So how supervisors can learn from each other, they can act more quickly together. What do you think we need in the future to be able to maximize the benefit of this supervisory community?
First, I like this concept of community. According to me, it means that supervision in Europe is neither centralized nor decentralized. It's something in between. And by the way, when I've said that insurance supervision in Europe is working well, that's both the merit of EIOPA and the local supervisors. We take the best of both worlds. EIOPA focuses a lot on the convergence and coordination, and the local regulators are rooted in the specificity of their market, social specificity, tax, and so on and so on. So again, this concept of community, which says EIOPA and the local supervisors are a community and are working well together to make the best out of this, I think is working well and is a good concept. Does not prevent us from looking at new things. First, if I look at the new EIOPA towards a 2030 strategy, first, I like it overall, and I like I think it was the third pillar on supervision, saying that we need to reduce bureaucracy, complexity, and so on and so on. We know that. We have to do it. If I look at our dear British colleagues, I mean, it's always interesting to look at what they are doing. In the FCA mandate, they've introduced a new mandate linked to growth and competitiveness. Interesting. So, again, my message here is what we've done up to now has worked well. This concept of community is working well, and we need to nurture it, and we need to continue to develop it, and so on and so on. And there are new challenges that probably require a new focus. The first one, again, taking inspiration from our UK colleagues, is should we and should EIOPA focus more on competitiveness? Today, EIOPA focuses a lot, as I said, on financial stability and policyholder protection. But to tease my friends at EIOPA a bit, this is easy. You just need to, if you want to have financial stability and policyholders and protect policyholders, you just need to add to increase capital requirements, to add new rules. This is much more difficult to say you need to do this, much more difficult to say you do this, plus you take care of competitiveness to have a competitive insurance industry. So I think we should brainstorm on this, and we should brainstorm on whether this is part of the EIOPA mandate. I mean, I think this is my first recommendation. My second recommendation, and again included in the new EIOPA strategy, we need to take care of simplification. We know that we have too many rules, that they are complex, that they overlap. Has started, we are not yet there. And the last recommendation that I would make is we need to have a higher focus on innovation. And I'll take only one example, which is AI. I am absolutely convinced that AI will have a deep impact on the insurance industry in many areas. Productivity, on underwriting, on distribution, without talking about the subject of can we insure AI, which is another one, but which is a good one. And here, I think Europe, for the time being, has not helped a lot the industry or the industries overall. I think the AI Act was an interesting exercise, which probably missed its targets. I'm probably a bit excessive. So I would love that EIOPA takes care of this and makes sure, and this is partially linked to my competitiveness topic, make sure that the insurance industry can leverage AI the best we can so that we can improve productivity, reduce cost, and so on and so on. So this would be my point. Again, I like the architecture as it is today and as the insurance industry, so this mix of EIOPA and the local regulators. We have quite a few challenges, which are a few new challenges which are the one I've mentioned. And I would prefer that we focus on this instead of looking at the past.
Sean, I feel like you might have some thoughts on the competitiveness mandate, but I also want to ask you about simplification and how the EU level push for simplification can be sort of reconciled with supervisors needing to maintain a robust and risk-based approach, and how you square that circle.
Okay, well, I have thoughts on competitiveness, but I'll keep them to myself. I'll focus on the simplification because it is, of course, a key objective of the Commission, this Commission. There are many different terms for this. So there's simplification, there's modernization, just come off a call discussing modernization, burden reduction, streamlining, you can add a few, I'm sure, not deregulation.
Yep.
Now, what is this preference for not using deregulation? I think it has less to do with the impact of simplification on the rules themselves, because we descope people, which is, if you descope people, at least for them, they are deregulated. It is more we do not want to affect the objective of the rules. So the idea here is to simplify the rules without fundamentally undermining the objectives. And indeed, I would argue that to the extent that rules can be simplified, it can be easier to achieve your objectives. If people understand the rules, know how to implement the rules, that's better for achieving your objectives, be it prudential, be it market development, be it growth, than having very complex rules. Now, the briefing I was given was I was to tell you a load of things about Solvency II and all of the proportionality and the improvements and simplification that we have delivered. Since you know Solvency II better than I do, you know what I'm going to say, so I won't bother saying it. Instead, I'll just come back to these paradoxes around simplification that I wanted to come to. We saw in the earlier Slido that there's this idea about stability in the framework. The thing about simplification is that it doesn't mean deregulation, but it does mean re-regulation. To simplify the framework, you have to open it. And so, as somebody who intended in this mandate not to open any of the framework, including solvency, we're opening lots of the framework in order to make it simpler. So there's this fundamental tension between those who argue that they want stability, but they also want simplifications. You can't have both. You have to make your kind of mind up what you want. The second paradox is the idea that the CEO comes to me, and he does come to me, or she comes to me and says, we need to return to principle-based legislation. It's all too complicated. It's all too detailed. And then the next week, the compliance officer rocks up to my office and says, we need legal certainty. How do you give legal certainty in a principle-based registered framework? You do it by giving more responsibility to the industry to implement the legislation, but quite frankly, the industry rarely wants to take it. The CSRD being a very good example, where we implemented the CSRD being the Sustainability Reporting Framework. We put in a materiality requirement, so we left it to the industry to decide what's material. Frankly, the industry couldn't do it. So now we have to come back and basically give them thresholds and cut lots of people out because they couldn't work out what was material or not. They could work it out, but they didn't want to take the legal risk. I think the last thing I want to say is the last paradox is where complexity comes from. I've discussed it with Petra many times. For me, complexity comes in level 1. The Commission produces a single rule. It's already complicated enough because finance is complicated. It proposes a single rule. 27 member states decide to adjust the single rule to meet the national specificities that Frédéric has mentioned. So you end up with a rather complicated single rule that has to adapt to 27 different national specific situations. Then we give it to the ESAs, who then write a lot of level 2 to explain the complicated level 1. And then the legal certainty issue arises, and you have to give guidance to explain how level 2 works to explain level 1. And the industry then comes and says, this is all very complex. But if you go back to the level 1s, who is it who's asking the member states to protect the national specificities? It is the industry. Yep. So the same people who are complaining about complexity at the bottom of the process are creating complexity at the top. If the industry is willing to accept the single rule, to change the national practice to meet the single practice, I think the whole thing gets simpler. Level 1 gets clearer, level 2 gets less necessary, and level 3 perhaps becomes unnecessary altogether. But this is I say this because I live in a world where I get ECOFIN conclusions which suggest that this can all be done at Brussels level. It cannot. And unless the whole set of stakeholders buy into simplification, it's not going to work. It cannot only be done either at Brussels level or at the official sector level. It does require that the entire market, official and private, work out for themselves how they want to have a more simple rules framework.
Gabriel, let's look at this issue in the future of supervisory unity. So say we're a few years down the line and this idea of supervisory unity, we've kind of made some progress. What would that look like to you?
Well, completely different from where we are right now, for sure. But let me start with the context. And I think that's pretty important. And I really believe that what we listened in 2 weeks ago from a Canadian guy that are telling the world as it is. We are living times of rupture. We're not living times of transition. And I think that we are all too comfy still in Europe. And I think this is really important. And I think all discussion on this small issue of supervision needs to, come in an answer to the bigger issue, which is, do we really want to continue to have Europe not delivering for its citizens as it should? Because if that's the case, then we'll be weaker and weaker. And I think this is all part of the same big issue. We are in times of rupture. And in times of rupture, we need to be bold. And I'm pretty happy that these guys in Brussels, for once, they were bold. When we look at what the recommendations coming from the Commission on very important issues like this, this pensions package that they put it out there right now. We really need to deliver to the citizens of Europe, especially to the young people that will not gonna have pensions as generous as this generation is getting. And this is fundamental, if we really want to have still European citizens believing that there is a bright future ahead for being united in this project, which is a fantastic project. So we need to deliver, and we need to be bold. They were bold from the Commission side. I hope that member states are also bold on implementing things like auto-enrollment, for example. And I think they were also bold, and I'm quite sure that they were having a lot of pressures from, different sides on the Solvency II review. And again, coming to the point of Frederick, and I've been a regulator and supervisor all my life, but to be honest, I agree with the way that Solvency II was reviewed. I think it is for the greater good. We need to have insurers, having better products for the persons, better long-term time products that really return good results for people, that invest in the European economy. I think that's a greater good than just, the atomic things that you can do with calculations. But at the same time, I think we should be intellectually honest. The changes that we made to Solvency II make Solvency II, in terms of, I would say, its strongness, make it weaker. We are not living anymore in a 1 in 200 year failure. The system is not as strong as it was before, and we should be intellectually honest and say this. But then we need to act. And as we are in times of rupture, we need to act with rupture also. We need to be bold. We cannot just say that we should continue this way of engaging and collaborating. Sorry, that will not deliver the supervision that we need. Because with the changes to Solvency II, we'll need to have stronger supervision. So I will tell you 3 things that I think we should have by 2030. We should have more centralized supervision. And we could start, we don't need to have everything centralized. Why the hell we still have, for example, reinsurers, which are the biggest shock absorbers in the system, that have a business which is completely, internationally, cross-border, not national. Why aren't reinsurers supervised centrally by EIOPA? First thing. Second thing, why the biggest groups in Europe, the biggest insurance groups, why aren't they supervised centrally? The biggest insurance groups in Europe are much more cross-border than the banks, than the biggest banks. Why do we have that still national? And I think this is all about a discussion which is very often focused on politicians and supervisors. I completely disagree with this argument of people that say that, insurance products are so national and so, they are so different. That's not true. Come on. The products are, by and large, the same. The risks are very similar. Oh, but we cannot do this at European centralization because European citizens, they are very nationalistic. Sorry. Do you think that the Portuguese citizen cares if the guy that's going to on-site visit a company has a Portuguese badge or a EIOPA badge? They don't care. They just want good supervision. They want companies that fulfill the promises that they make. So it's not about the citizens. It's about who? It's about politicians, and it's about supervisors, and it's about egos, my friends. That's, at the end of the day, what is the issue. And we should move forward on this. Clearly. And sorry, if it is up to an old guy to come here and to say this truth, it is true. This is what is happening. Because, and I always remember, and there are a number of guys in here that know that. When I was chairing EIOPA, I was telling always the members at the board saying, you're not the national supervisor. In here, you are EIOPA. So EIOPA is the supervisor. So the simple change of having a number of course, colleagues from all the countries around the table taking decisions, that's the beauty of the European system. And we should deliver for citizens much better than we are delivering until now. Now, if you don't want to move as drastically as having the big European group supervised immediately by EIOPA, then at least I give you a clue. If you want to make an impact, you know what you should do? Start with internal models.
We try.
Internal models should be supervised by EIOPA centrally. There is no level playing field going on right now. And this is also a lesson to all the supervisors of the middle-sized and small countries throughout Europe. We don't have a level playing field from these biggest groups with the local companies that we have in the different countries. So let's make that move. Why not having internal models supervised centrally? This is a step that we could do. It's not a big change. It's a step that can be done. Now, third thing, why can we not make EIOPA the data hub of Europe in terms of all the information that is there, in terms of all the insurers that are there? Why not? Why can't we build? We made this fantastic thing that many people thought it was impossible. You know, we have standardized reporting in Europe. Why can't we work on that reporting? Why can't we make risk dashboards which are common? Why can't we make risk reports that are common? Why can't we make people from different countries looking at an insurance group and taking decisions collectively? You know, do you think that citizens will care if this is done in Frankfurt or with colleagues in video conferences throughout Europe? Sorry, citizens want to have Europe delivering for them. And this is what we need to say very clearly and loudly. You know, if we want citizens being with us, and if we want insurance and insurers also having really what they should be delivering for the society, with pensions on natural catastrophes, for example, we need to have insurers having much more business, much more protection to the European citizens, so that one day in this room, instead of talking about NBFIs, we'll be talking about that NIFIs, non-insurance financial institutions, because insurers will rule the world for sure, because they will be much more stronger. So, paraphrasing what our colleagues on the other side of the Atlantic are doing, and it's not the case that I'm advocating for that, but we should work all together and build mega, make Europe great again. Thank you.
Any quick reactions from the panel before we open the floor to questions?
I agree with him. No, I mean, I do not fully agree. And I will react both to what Sean and Gabriele have said. So first, we're in favor of convergence. And I'm always worried, and this is EIOPA's mandate, and we have much more to do on this. And I'm always worried when we first start to say we need to extend the supervisory power and so on. This is not the point. The point is we need to do well what is the mandate today. So we need to have more convergence. We need to fix what doesn't work. For example, what doesn't work up to today is cross-border supervision. So let's work first on convergence, and then who is doing what is another story, according to me. My second comment is, Sean, I agree with you. CEOs are in favor of principle-based regulation. And you said head of compliance are not. Of course, they are not in favor of simple regulation. And these guys, they want to have complex regulation. But between the CEO and the head of compliance, I think we should listen to the CEOs.
Problem of the lawyer.
And I think this is part of the solution, is to have more principle-based regulation in Europe. And we are fed up of these thousands of pages regulation where everything... You talk too much to the head of compliance, Sean.
But they don't work.
And
they don't work for me. They work for you. So you tell them.
Yes, but
then I won't see them anymore.
I said talk to the CEOs. And my third and last comment is, at the end, in Europe, we should always answer to the why question. I mean, why are we doing this? And I think, generally speaking, we do this because we want to protect policyholders,
and we do something because we want to have a more competitive industry. And if it doesn't pass one of these tests, we shouldn't do it. I don't want to be mean to the Commission, but FIDA doesn't pass any of these tests. So if a regulation doesn't pass this test, we should just not do it. And I think we should never forget this why question. Why are we doing it? And are we going to improve either policyholder protection or improve the competitiveness of the insurance industry in Europe?
Excellent.
Yeah, just very, very briefly, I'm picking something that you say and you say as well, and why we are doing this. And the huge leverage also that member states have when it comes to refining the rules at level 1. I will take the case of RIS, the retail investment strategy. The retail investment strategy was a discussion about product quality. It was about improving the outcome of markets because we were not able to have competition that will do the job. And now in the last stages, when we hear about what is in it for citizens, I hear we have rules for influencers. So when you ask a citizen, what is Europe doing for you? We give you rules on influencers. So influencers don't mislead you on buying crypto. Okay, but what was the starting point? The fact that we have not well-functioning markets for investment products. And we needed to protect consumers and introduce, have a level of intervention to increase the quality of these products. And I think we have to be honest about that vis-a-vis our citizens, because that's a failure of the regulatory system that we have. I'm sorry, but there is no omnibus that's going to fix that, because the problem is here to stay. In so far that we do not introduce an appropriate level of competition and create the much needed scalability. So we need to get rid and overcome these national protectionisms. And what is interesting to hear, especially in the Council, is when the head of states that meet, they're the first one to say, we need a capital markets union. We have to get this. But then you get the finance minister there, and they say, hey, but wait a second, I need to keep this here, and this you take it out, because no, I'm not going to do that to EIOPA. I'm not going to do that to ESMA. So there is a total lack of consistency between what is the political vision and what we do in practice. And I think we have to be honest about that as well.
It's true. I mean, I need to come back on some of these points, mainly because I speak to too many compliance officers. I shall now take your advice. But, I mean, what Frederic and I Wilson is saying the same thing, that there is a disconnect between the strategic level and the operational level, both in the market and in the government side. So we have heads of state who want a capital market union tomorrow, sometimes literally tomorrow. But at the operational level, it doesn't filter down. And similarly, we have CEOs who do not want this complexity, but their staff, not my staff, I can't tell them. You can tell them to stop. And then I won't see them anymore. I promise. The other point I want to make is about the retail. And a few years ago, I was on a panel in the ECB, which was a market panel, and I was chairing it, and it had a really boring title. Sorry, anybody from the ECB, but it had Retail Integration Progress to Date or something like this. And I decided I wasn't going to do this. So I just asked my panelists, would they change the title to the question, is there such a thing as an EU retail client? And the panel concluded that there is, which raises the question about these national specificities about at the retail level. How many of them are really there, or how many of them are there that we kind of want them to be there?
Yes.
We need to ask these retail people, do they really care about some of the things we say they care about? Because I suspect they don't. And we used to have, when I started 100 years ago doing integration, that there was natural barriers, language, proximity. I mean, you press a button on the internet now and you get any language you like. These natural barriers are all gone, and yet we still talk about them. Oh no, you can't sell that product because it's in Portugal and it has to be in Portuguese, and my people are not really anymore. But so we have to understand these national specificities. How many of them are real? and how many of them are sort of either remnants or constructed. We have to be there. And lastly is just to comment on Gabrielle's point on scale. I mean, it's pretty much a no-brainer. The future is not a place to be small in. If we hadn't got the single market, we'd be trying to build it now. Yes. We have it. We just have to kind of keep building it. So let's get serious.
Indeed.
Who has a question?
I am not far from this conclusion.
Yep.
And we want to build a savings and investment union, for instance.
Indeed.
I'm again not seeing. I see it. No, you were okay. You were just touching your hand. Never mind.
She's afraid.
Sorry, I've scared you now. Any questions in the room? Okay, after such an impassioned debate, I'll wrap it up with the same question to all of the panelists then. If you had to choose one concrete action to strengthen the protection of policyholders in Europe in the next 5 years, what would it be? Who wants to come in first?
Oh, I can go first. A small thing, but it will have a huge impact. And again, one issue that it was EIOPA that put on the table. Everybody now talks about value for money. That was something that we initiated. So I would really advocate for having good benchmarks for value for money products around Europe in the main areas, and then to implement and to supervise these in the right way.
I will continue saying it will not surprise you. Stop enacting new rules. And let's do the best out of what we have.
Yeah.
And if this is not bad, what we have, this is even good. So now we stop here.
What I would like is that we don't need to rely on disclosure, that we don't need to rely on benchmarks to protect consumers. I would like that the market will be mature enough that gives you the right products that you need. But insofar we are not going to get that, what we need is value for money. We need convergence. We need resources for the authorities. We need resources for EIOPA. We need resources also for the national supervisors, because they are the main contact point for consumers. Yep. And something that we need above all is the effectiveness of European Union law. What does it mean this in practice? That European rules need to deliver to the people on the ground. And when there is an NCA that does not do its job, that there is mechanisms in place in order for EIOPA or ESMA or whoever to come in and say, hey, you need to protect your people because your citizens are not second-hand citizens, are as worthy as any other citizen across the union.
Sean, you have the last word.
I live in a world where there are no silver bullets, so I don't have a single action that I want. I think what I want is a change of mindset. I was talking to Gabrielle before, and he said to me, maybe we need a crisis. I think we have a crisis. It's just not the sort of crisis we're used to, the acute crisis. We have the boiling frog crisis. Yep. Where the water has been slowly warming around us. Mind you, it's got a bit hotter recently, but it's still probably not sufficiently uncomfortable. So I guess I would like us to stop being the boiling frog.
Yeah.
Okay, well, thank you so much. It's difficult to sum up such a lively session, so I'm actually not going to try. All I'm going to do is say thank you so much to all of our panelists.